there are 199 new insider trades that came through, and it was another very bullish day, as we will see when we take a look at our dashboard here with all of the top insider trades. As you can see, we got over 50% again of the percent of unscheduled insider trades that were buys, which is way above the median of about 33%. So another very bullish day there. We had just 2 days really below this wasn't even in November, I guess. So only 1 day so far in November below that median, which means we are in a very bullish start to November, as we'll see over here, above the month of October and pretty high. So the last 3 weeks, as we can see, have all been above 40%. Quite high there. And then we'll see, obviously, we had a little bit of a dip there as some of our better weeks on our rolling 3-month insider sentiment here. One of our better weeks just rolled off, and then and now the week that is now the oldest, it was a much worse week. So that'll start to roll off, and we'll see this number start to creep up again, because the last 6 weeks or so, or really since here, 1, 2, 3, 4, 5, 6, the last 7 weeks, so 7 of the what would that be, 12 weeks that we count in our rolling sentiment there, have been very bullish. So right now we're kind of this one I believe is the oldest week that is currently being counted in our time frame there. So as long as the new insider trades coming in continue to remain up here, we're going to start to see this sentiment continue to creep back up close to 25%, maybe even above it there soon. So firmly in the bullish territory, even as the market continues to be a little weird. If we go take a look at the S&P. So some of the AI data center stuff really started to roll over, even though the S&P had a pretty good day. As you can see, we bounced off that 50-day there, and now we are, as we can zoom in a little bit here, we are clearly above the 20-day. I mean, everything just kind of up and to the right here for the S&P. We had this, we got pretty overextended there, bounced down to the 50-day, and now we're kind of off to the races again, even with, pretty surprising too, because a lot of the let's see here, so like Core Scientific, a lot of these AI data center plays got smacked today, down 10%. What about like Nebius Group here? Nebius Group down 7%. So a pretty brutal day for a lot of these guys, falling below and these obviously were the stocks that, were the industry that was really kind of leading the way there. We've got Nvidia even kind of flirting with the 20-day, slightly above it right now, but getting pretty close. So pretty interesting to actually see the market going up while all of these stocks are getting hit. And then obviously, as we've seen with the insider trades, most of the insider buying going on is not in those companies. Obviously, those have most of the insider selling, which obviously so far hasn't been correct. But the insider, as we know, insider sentiment tends to be a little early. It tends to come well before when we start to see the stocks actually roll over. So it will be interesting to see. Most insider buying right now is in the financials, in the real estate space, which unfortunately 2 of my least favorite spaces, but in most of the selling is in a lot of these very overpriced or potentially overpriced, AI plays, energy plays, some of those kind of things that have been on a huge run. So it'll be interesting to see how those play out, but let's go take a look at the most recent insider purchases here. As always, at CEOwatcher.com, which you should go to anyway and sign up there, because that'll put you on the email list, which comes out before the market even opens, and you can get a glimpse into the highest quality insider trades that have gone on. One of which being this Lattice Semiconductor here, where the CEO, I'm pretty sure the CEO buying the stock, as we can see here, not 10b51, no note, so a perfectly nice insider purchase there. As we can see, also the first insider purchase in quite a while. I'd be interested to see, as a semiconductor play, did this insider purchase help it out at all? Not really. I mean, it's still down a little bit, down a little less. Again, trading below the 50-day and 20-day. So this would be one where we'd want to wait for it to creep above those before really taking a more serious look at it. As we can see, we're kind of right in no man's land right there. If it did come all the way back down to the 200-day, then it'd be interesting to maybe take a stab there. Or obviously, if it gets up above the 50 or the 20-day, it could be more interesting. But just looking at the insider trade here, we can see 2 years, no insider purchases, tons and tons of insider sales, well over 100 insider sells in a row before the CEO here steps in with a pretty sizable insider purchase, 12%. Almost, $1.9 million is certainly notable. If we look at his history, let's see where his purchases are. So these are all sales, a lot of 10b51 sales too, which we ignore because those are just kind of scheduled sales. But if we look down here, we can see we got a purchase right here, up 113%. We got a purchase right here. Let's see if this is actually part of a an employee stock purchase program? No, so it's just telling you. So this is one of those things you want to look out for. It's just telling you include 665 shares acquired through the company's qualified ESPP. This was still a discretionary purchase here, up 67%. What else do we have here? 2 down here, 40 and 4%. Not quite as good, but still obviously better than nothing. And then had a huge run of sales here for 6 years or whatever, and then now is buying 11% of the stock. Is certainly notable. Obviously, he's going to have very good historic returns here because all of his previous purchases have been positive. So overall, a very, very high quality. It's also his first one as a CEO here at Lattice Semiconductor. I believe he joined about a year ago. So first purchase there and first purchase overall in a very long time. So definitely a high quality insider purchase there. And then if we go, we're already on the proper ticker, so we can go take a look. As we already took a look at the prices there. If we look at not performance but valuations, we can see kind of trading right about, they must have taken a hit, which I guess I didn't pay close enough attention to the chart, but maybe a little low on the EV EBITDA, but we probably EV sales makes the most sense for this kind of semiconductor company, right at their median, so they don't appear particularly cheap. I would guess if we go further out, yeah, they're expensive if anything, but over the last 5 years, not particularly cheap. They kind of go through this nice little cycle, so if you just kept buying down here, but it looks like might not, or the CEO at least is betting on this not to get down this far, unless I guess the sales ramp way up and the stock price doesn't move much, then maybe it'll creep back down there, but not super cheap really. So this is almost a little bit more of like a momentum play. So the price they must have had poor earnings right here because the stock came down quite a bit from the 70s down to 60 or so, which 15-18% somewhere in that range. But overall, certainly a high quality and very interesting company, and I believe they have a data center segment, I guess, is growing very quickly. So revenue grew 5%, which doesn't seem like a ton, but it's actually their fastest growth in a few years. Yeah, driven by the strong communications and computing growth, which is their AI data center arm there, which then if they do mention, which was growing much faster, it's growing 21% year over year, and now it's making up over half of their revenue. So if this continues growing quickly, then obviously now it's over half the company, so the overall company is going to grow faster as well, which could be a nice little boost there. So overall, a very interesting setup. Just again, would like to see it above the moving averages before really taking a stab there. T-Mobile, this one, I mean, just not an interesting company really, obviously, but big phone carrier, normal price, normal purchase there, nothing to be worried about. But as we can see, first purchase ever for the CEO here, so that is certainly notable. Buying $2 million of the stock, notable. 12%, notable. If we go look at the ticker itself, nobody's ever buying T-Mobile stock. So I mean, 2 years of just a ton of selling. One little pretty well-timed purchase, I guess, 217, at least in the short term. The stock then over the next 3 months went from 217 to 250 there, 10% or 15% or whatever, which for a company like T-Mobile, not too bad. But it's certainly interesting that we see, I wonder who made that purchase back then. Andre Almeida or something along those lines. Stock went up 20% in 3 months. Who was this? Just a director, it looks like. So, CEO buying the stock, certainly notable there. Pretty boring company, so not normally something I'd really look into, but a 3% day today, trading well below all the moving averages. Another one, gonna just want to wait for that to creep above any of them before really giving it a serious look here. Probably the 50-day looks like a pretty good one that to be used there. If we take a look at the valuations, trading slightly low, it does look like, on either a PE or an EV EBITDA, lower on a PE, but EV EBITDA probably makes the most sense here, and still trading a little bit below average, so maybe a little bit of a value play, even though the stock's not really down all that much. Down, I mean, I guess maybe a little bit over the last 6 months or so. Tell us 15% last 6 months, 17% last 3 months. I mean, for a company this big, I guess a little bit of more of a dip than you'd like. And then obviously if there's a flight to safety, if people do start rotating out of a lot of those AI names, it could be interesting. Not normally my cup of tea, but would again like to see this start to trend in the right direction here before taking a stab and see if you can't, get yourself catch one of these nice little run-ups there. But as of right now, would like to see that price action look a little better before seriously considering taking a stab. Speaking of some of the industries that are catching the most heat right now from insiders, we have, let's just see here, purchase agree represents the reinvestment of accrued dividends. So here's one where the dividend reinvestment is actually why the purchase is taking place, and in this case, I would skip this one because even though Ryman Hospitality Properties is in the REIT, is a REIT most likely, or at least in the real estate sector, so that is the hottest industry right now, actually just past the financials, but just part of a dividend reinvestment, so not very interesting for us. I mean, another one in the capital space, which would be in the financials, which is the second highest industry right now in terms of insider sentiment. You know, we've got the CEO buying the stock at $12.63 or so. Stock is currently $12.78, so it looks pretty good there. First ever purchase by the CEO, certainly interesting. According to this, at least, you know, tripled his holdings, almost 2.5x his holdings, which, I mean, according to what they've listed here, I would assume he owns a little more than that of the stock, but according to the listed holdings, at least a pretty massive increase there. We go see what else anybody else is doing. Never like to see a sale happening right at the same time as the buy. If we look historically, no real purchases before. I'm not sure exactly what was going on here, but no real purchases before since 2021. Really, nobody has bought the stock. Didn't go well for that guy, but first purchase in a long time is certainly interesting. Handful of sales here before. All of that kind of does look pretty good. We go take a look. I mean, this is an industry I don't know super well, so I'm not going to know really what to look at. I don't know all that well what to look at for in terms of like valuation and stuff, but a much nicer chart than what we're seeing there before. Especially, can it get above this 200-day and start moving in the right direction again? Would certainly be nice. So we will see if that is the case. But right now we've got it above the 50-day, above the 20-day. I wouldn't really, you know, fault anybody for taking a stab when it looks like this. Let's go see here. Price to book, probably trading about average on, looks like, just on a quick glance there. But if we see here, I mean, for me, since it is butting up against the 200-day here, I'll be like, yeah, let's let it play out for a day or two and see what happens. See if it can get above there, or if it's going to come back down to the 50 or something, and I'd wait for it to get a little closer to one of those. So if that is the case, though, it could be interesting to take a stab. Again, insurance, not really my sector. I don't really know exactly what you want to be looking at there. So for me, I'm not going to talk too much about what else is going on there, but solely from the insider trading standpoint, first ever purchase by the CEO. Tons of selling at the company before. Obviously, company down a decent bit, a little bit of a value purchase here. But in this case, unlike most of the stocks we see, it's actually trading, actually is above the 50-day and 200-day, which is pretty interesting. Butting up against the 200-day now, so we'll see if it can get through there or not. And so you can go to CEOWatcher.com, obviously look through all the stock pitches yourself, get on that daily email list, and don't forget to like and subscribe, and we'll talk to you next time.